Your credit score might be the most influential number in your life. This 3-digit number is attached to you and will be directly responsible for helping you get better loans, mortgages, and stay financially responsible throughout the course of your life. This number can indicate how financially responsible you are and directly tells banks and credit lenders whether or not they should give you better interest rates or even give you money at all. We want to get our score as high as possible, which at a maximum score of 850 is the best thing we can achieve. Today, I'm going to walk you through the 5 key things you can do to increase your credit score immediately. Your credit score is made up of 5 key contributing factors. These factors include payment history, making up 35% of your score, credit utilization making up 30%, length of your credit history making up 15% of your score, types of credit in use making up 10%, and the amount of new credit you have making up 10%. As we can see, our payment history and credit utilization are by far the most important, making up 65% of our credit score. But today I'm going to show you how you can boost all 5 categories so your credit score can increase. What exactly can we do to increase our credit score? Well, looking at your payment history, we need to focus on that first. Payment history is a record of all of our payments on our credit accounts. This can include credit cards, your mortgages, and any other loans out there. Any late payments, bankruptcies, defaults, or any other negative thing can significantly lower our credit score. Put it simply, whether you've missed 20 payments in the past or you've never missed one, the biggest thing you can do to help increase your credit score with your payment history is to consistently make payments on time and in full. Whether it's with your credit cards, your mortgage, loans, whatever it may be, as long as you are making your payments on time and making them in full, you are showing the banks and credit lenders that you are financially responsible and that you are trustworthy. Thus, you'll have a positive effect on your credit score. If you're having trouble remembering when to make your payments and you don't necessarily remember when your bills are due, I'd highly recommend signing up for autopay, especially if you're someone with multiple loans and many different credit cards. This way you never forget to pay your bill and your credit score will thank you later. Once we ensure we are not making any late payments, the next thing we can do is focus on our credit utilization. Credit utilization essentially boils down to how much of our available credit we are consistently using. In this case, we want to keep our credit utilization as low as we possibly can because this shows the credit bureau and the lenders that we are more financially responsible and we are not seen as higher risk. For our credit score to increase, we need to try and keep our credit utilization below 10%. There's evidence that shows that keeping it around 1%, just above 0, is the best place to settle at. But for the sake of everything, I just recommend keeping it as low as you possibly can. Where you'll run into issues is if you're consistently using 60, 70, or 80% of your available credit line. This is seen as risky and not necessarily financially responsible by the lenders. One thing that we can do to try and increase our credit score and keep our utilization low is by paying off a good chunk of our credit cards or whatever else it may be before the statement ends. I have a video talking about the proper times to pay off your credit cards. I'll link that up above and down below. That will help walk you through the exact time to pay your credit cards to increase your score as much as possible. Let's say I have a $10,000 credit limit and I've used $2,500 or 25% of that limit for a specific month. Well, I'd like to get that down a little bit lower and say my statement is closing tomorrow. I could go into my app right now and I could pay off maybe $1,000 extra of it, bringing my utilization down to 15% or $1,500. I do understand that everyone's in different financial situations, but by just trying to pay off as much as you possibly can and drop your credit utilization, you can definitely make yourself out to be more financially responsible and better off in the eyes of the bureau. This brings us to my 3rd tip for today, which is to repeat the first 2 steps consistently for a long period of time. Fortunately, our credit score will take a good amount of time to increase to those really high numbers, around 800 or even touching 850. And if you have made mistakes in the past, it will take some time to recover and prove that you are financially responsible now. Age 22, I've had my credit lines open for around 4 or 5 years now. And compared to some people out there that have had multiple decades, my credit line and my credit history is very insignificant, and it doesn't show much to these lenders that I am financially responsible. One thing that I can control is how often I make my payments on time and how consistently I'm keeping my credit utilization low. If I do this, I know that in say 10 years, my credit score will be higher and higher and higher, and I'll be able to reach the highest I can possibly do if I repeat these steps over and over. Another thing that we can do here is by opening more and more credit lines to show that our credit history is continually changing, but also practicing good financial habits with those new lines of credit. This can be in the form of applying for new credit cards, getting new loans, or just whatever else it may be that shows that you can take on credit and take out a loan and still pay it off responsibly and in full on time. Really, to summarize this tip, I just say make sure that you're practicing good financial habits, paying things off in full on time consistently for years, keeping that credit utilization as low as possible, and your credit score will continually rise gradually. Before I jump into my fourth tip, if you guys could please go hit like and subscribe. It goes a long way in helping me grow the channel. Tip number 4 is to try and diversify the types of credit that you have. What I mean by this is not just having only credit cards as our line of credit or only having our mortgage. It's trying to have multiple types of different credit that we can use to show that we are responsible in a couple different realms. Credit accounts can be generalized into 2 different categories, which are revolving credit and installment credit. Revolving credit is typically like your credit cards, where you have a set amount you can spend each month and you'll have to pay it off consistently and on time. Installment credit might include your loans or mortgages or other fixed payments in which you'll have to consistently pay off whatever your loan is. Having multiple lines of credit in each category, we can come off as more financially responsible, assuming that we are putting into practice our first few tips from today. Once again, I want to emphasize, if you have multiple lines of credit open, it won't help you out that much if you're missing your payments or just being late. One final note is that this just makes up 10% of our credit score. So yes, it is important. However, by far the first 2 tips are way more important than 10%. Similarly, let's talk about tip number 5, which is to watch how often you apply for new credit. Once again, this is just 10% of our credit score, making it important but not as important as being consistent and on time. One thing that can actually negatively affect our credit score is applying for multiple lines of credit consistently over a short period of time. Let's say I apply for 3 credit cards within a 2-month period. This might not seem the most financially responsible to the credit bureau, so I might see an impact on my credit score. This factor on our credit report is broken up into 2 categories: the number of new credit lines we've opened and the number of inquiries we've had recently. Our new accounts opened is pretty self-explanatory, just being the amount of new credit we've opened. Whether that's new credit cards, new loans, mortgages, whatever it may be, that's a form of new credit. If you are going to apply for new credit cards, I typically like to follow the rule of waiting maybe 3 to 4 to 6 months between applying for credit cards. An inquiry happens each time you go to apply for new credit, and the lender will do an inquiry on your credit report. The reason they do an inquiry is to see if you are financially responsible and to check out what your credit report is. That way they can deem if you are worthy of them giving you more credit. This is commonly referred to as a hard inquiry. It is common that when we do go to apply for new credit cards or new forms of credit, that this hard inquiry will actually drop our credit score temporarily. I don't think that's anything to be worried about, as typically if you do practice good financial habits, your score goes back to normal in 2 to 3 months at most. My biggest tip here would just be to space out how often you are applying for credit scores. Do some research to see the optimal time for whatever loan you're applying for or how many credit cards you have, just to make sure that you're not taking on too much credit at once. As I said earlier, that's seen as risky behavior. To summarize everything that we've talked about today, the biggest thing that we can do is make our payments on time, keep our credit utilization as low as possible. We can try and diversify the amount of credit that we have and the types of credit we have. We can also try and apply for new forms of credit when it is appropriate. And most importantly, we have to consistently do this for a long period of time. Credit score will increase. It's just going to take a long time for it to increase. You can most certainly take control of your credit score today by just practicing good financial habits, but just please don't expect to get a score of 800 because you didn't miss a payment for 3 months. If you guys learned anything from today's video, please let me know down below in the comments. If you have any other questions, feel free to comment those as well. As always, if you guys could please hit like and subscribe, it goes a long way in helping the channel. I'll see you guys in the next video.